Dividends play a huge role in my portfolio. And the main reason for that is that I like to rely on this steady and consistent income. For me, it's a great way to grow my portfolio at a steady rate. This year alone, the S&P 500 is up 22.5%, which is pretty nice. However, my portfolio is doing slightly better with 26.2% return. And I don't say this to brag or to convince you to invest in dividend stocks. It's more that for me it is working. And I would love to share my 5 biggest dividend paying stocks with you. So here we go. First of all, let's take a quick peek at my overall dividends. For this, I'm using the div tracker on my iPhone. In total, I received $823 for the full year of 2024, assuming all dividends are paid in the upcoming months. That comes down to $68.61 per month on average, and $2.26 on a daily basis, yielding at 3% in total. And all of the dividends are tax deducted already, so this is full profits. And as a matter of fact, since I live in the Netherlands, a lot of these taxes I get back, which is about another 10 to 15% each year, adding another $80 to $120 extra. Moving on to my top 5 stocks, we have ABR, VICI Properties, Main Street, Ares Capital, and Starbucks. These 5 stocks combined make up for about 55% of my total dividends. Another thing is that are really standing out is the fact that all of these companies are either financially service orientated or a REIT, except for Starbucks. Now let's move on to the biggest dividend paying stock in my portfolio. Arbor Realty Trust, ticker symbol ABR. Year to date, this stock is trading sideways, with a lot of buying opportunities throughout the year. In terms of total returns, ABR is pretty close in matching the S&P 500, thanks to its dividends. And the dividend scorecard is looking pretty impressive. ABR pays a juicy 11% dividend yield as of right now. Annual payout is at $1.72, which is insane. The payout ratio isn't correctly displayed here at 118%. According to the latest earnings, it is sitting at 91%, which is still a bit on the high side of course, but also very common for companies like ABR. Dividend growth stats also look pretty impressive, especially with the 10-year growth streak. In total, ABR pays me $121.84 each year, and I own 90 shares in total. It's only 5% of my portfolio in terms of value, but it brings in 15% of the total dividends. My current strategy is to hold ABR. Due to all the things that happened lately, the stock price increased quite a bit, and I'm only buying more shares when it is below my cost average of $14. My second biggest dividend payer is VICI Properties, and I only own this stock for a few months now, but it became quickly an important asset in my portfolio. Year to date, the stock is actually down a little bit, creating lots of buying opportunities. And looking at the total returns, we see a similar situation as with ABR. The value lies in the dividend, since VICI was pretty close in matching the S&P 500. Looking at the dividend stats, we see that VICI, as of right now, has a dividend yield of 5.3%, which is pretty nice. Annual payout is at $1.73, and payout ratio is looking really good for a REIT at 65%. VICI started paying dividends 5 years ago, so the growth numbers are actually pretty impressive. In total, VICI pays me $85 each year, and I own 53 shares. It's one of the biggest REIT positions I have, and I do think VICI is undervalued right now. My strategy is to slowly buy more shares from here. It's already one of the bigger positions and I don't want to lay all of my eggs in one basket. But whenever the moment is right, I'm definitely going to buy more shares. Moving on to the third biggest dividend payer, we have Main Street. the first monthly dividend paying stock in this top 5, and also the last. Main Street has seen an incredible year with a 19% increase in stock price, so the momentum was definitely with them. However, the stock is still lagging behind when it comes to total returns versus the S&P 500. But it is again the same story as with the others. It's all about the dividends. Main Street has a current dividend yield of 7.95%, which is pretty insane. And annual payout is at $2.94. Also, keep in mind that Main Street pays a monthly dividend instead of a quarterly dividend. Payout ratio is also looking pretty good for a company like Main Street, and they even managed to grow the dividend a little bit over the past years, also indicating that they are really caring about the shareholders and their dividends. As far my strategy goes, I'm holding this stock. Not too long ago, I doubled my position when Main Street was trading under the $50. For me, it was a great buying opportunity, and for now, it is sitting at a decent amount. In total, Main Street pays me $81.67, and I own 30 shares. Whenever the stock price goes on the $50 again, I might expand my position, but for now, I'm good. Moving on to the fourth stock on the list, we have RS Capital, ticker symbol ARCC. I recently added this position and it quickly became a cornerstone in my dividend portfolio. The main reason why I added ARCC is that it is an amazing company that pays a juicy dividend. Year to date, the stock is up nearly 8%, but there were a lot of buying opportunities throughout the year to buy at much lower prices. ARCC is slightly underperforming the S&P 500, but managed to come really close a few times in the past 5 years. That's also because ARCC pays a juicy 8.86% dividend yield. Annual payout is at $1.92 and payout ratio is looking pretty good for a company like ARCC. They even managed to increase their dividends in the past few years, which is quite impressive. In total, ARCC pays me $80 a year, and I own a total of 45 shares. For now, my goal is to bring this stock up to 60 shares. The question is when. For me, it doesn't really matter, as long as the price is right, which for me should be somewhere around $20. In the meantime, I enjoy their dividends. And now, let's go check the last stock in this list, which is Starbucks, the only company that isn't a financial service company or a REIT. Starbucks is up 4%, which is not a lot. And looking at this chart, we see that there was a really long period where Starbucks was trading much lower, around $70. Looking at the total returns, it's not looking any pretty for Starbucks. So let's see how the dividend stats are looking. For most people, Starbucks is a pure dividend growth stock play. Dividend yield is actually not too bad for a company like Starbucks, hovering around 2.5%. Annual payout is at $2.28, and payout ratio is a little bit on the higher side here. I prefer 50% or lower for companies like Starbucks. The growth stats are looking really nice, especially the 13 years of dividend increases. As far my strategy goes, I'm holding this stock as of right now. Starbucks recently increased a lot in stock price, making the valuation a bit more tricky, since a lot of things are happening at the company right now. They are struggling in terms of revenue growth, and there is a new CEO. I managed to buy a lot of shares when it was trading around $70, drastically lowering my cost average. In total, Starbucks pays me $76.82 a year, and I own 34 shares as of right now. And with that being said, we are coming to an end of this video. I'm really happy with the way my total portfolio looks, and to be honest, the same goes for my top 5 biggest dividend paying stocks. Of course, there are things I would love to change, and one of them is being less relying on ABR's massive dividend. To compensate this, I increased my ARCC position a lot lately, as many others. For the coming months, I will keep on doing that. I also think my top 5 will look completely different in a few months, so I'm planning to do this video every few months to give you all the insights. And I'm very excited to hear your thoughts on these stocks, but also on your top 5. What are the biggest dividend paying stocks in your portfolio? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.